This is Maximus Analysis here for January 27, 2016, and we see that we had the FOMC shake. So this is the ES, the S&P futures, and we need to hold above this 1850 area. Okay, they still have a chance to go up depending on what the action looks overnight. They would need to recapture that 1887 level and continue higher and close and break above the 1903, and on the weekly time frame we would definitely want to see them get over the 1910. Right now we've seen this is a kind of an indecision kind of where we're going to go at this time. So we have a long tail up down, so if they break below again this 1850 and close, again you see a lot of long wicks, so I don't know if they're cleaning out stops and trying to go, pick a direction, but you just don't want to get caught trying to, a lot of people will say this is very overbought. That's fine, but you have 1, 2, 3, 4 days of pretty much very sideways movement. Now if you're an intraday trader, you would you love this type of movement because it's giving you big intraday swings. If you're a swing trader, you kind of want to sit on your hands. So that is where we talk about the time frame gives perspective. So right now on the daily time frame, you still want to kind of say at the end of the day, if you're looking to go long, your line in the sand is that 1804.25 area for the ES. Now you have the NQ here, the NASDAQ futures, pretty much closed near the low, and we will be looking at a couple of names that were down today. But we want to see a hold of this, basically this 4,000 level. And right now you've had, huge moves up in regards to this would be an evening star type of pattern for some those that study the Steve Nissen type of Japanese candlesticks patterns. And the low, if you went long, the stop would be below this low. So let's see what they do overnight and take it from there. We have the YM, which is the Dow futures, again showing more of it looks more like a flag, quite honestly. This would be the pole and the flag area right here, and we want to see if they're going to break below this low to continue for more downside potential. CL is giving intraday moves. Again, today was EIA report, so the inventory report comes out weekly, and those are days that I typically try my best to get away from. If I don't have a trade on, if I'm day trading crude before 10, I take whatever money I can get and I just leave it alone for the rest of the day. So he had a double whammy today, which was EIA report at 10:30, FOMC report at 2. So I kind of cut the day short just based on probabilities that I've seen. So again, with CL, you have a same flag type of pattern, and they need to not get below this 29.50, 29 area to continue for some more potential downselling. So now you have Apple, which is down about 6.5%. Earnings weren't what were expected. Again, if you want to talk about the fundamentals, that's something else. I'm just talking purely on the chart, and we could see off of the weekly that they are testing this 200-day move. They're about to test this August low if they're not there already. The low of this candle will be 92, so they're right about there. So we want to see how they really react at this point, and if they're going to hold this 200-day moving average for Apple. Right now it's in a weaker position, but again, time frame will give you some type of perspective. So if you're drawing a fib from here up, if you trade the weeklies, you're at, listen, I'm at the 50%. If I get a break of a high, I might go long if this is your time frame. On the daily time frame, you're going to have to wait a little bit for a better type of setup. Let's look at Priceline. Again, it got downgraded before the market and gapped down and closed down. So it's been pretty much in a downtrend right now, and I would not be looking to add to any. I wouldn't look to short now on a breakout unless you're willing to put your stop above here, 11.30 for Priceline. So just be cautious in regards to don't chase things if you're not in already. You had Netflix. Again, Netflix has continued to just grind down. So we see we've been trading in this range here, this range from here to here. And right now it needs to hold this previous low. So you had a nice run up, and again, this is another reason why I don't trade breakouts, because again, your stop would have to be below here. Why take all this additional pain? But we want to see where this one stops. So you don't want to start guessing the bottom. unless that's something that you do with limited risk, because that could be a painful way of turning a trade into an investment, and that's not what you want to do. FIT continues to go down. You had Goldman Sachs again gave a little pop up, but you see the bank's clearly in a downtrend, and if it gets back to this level here, this price level right here, it could still be a short even if we get a rally back up. You have Boeing that was actually gapped down as well. You have, who's the other names we need to look at? We have Amazon. Amazon giving a little sell signal. Again, your stop would be above here if you're looking to get short. And we'll see, again, it says the psychological 600 level, so we'll see how this one plays out as well. But you can see that a lot of chart patterns are a little bit broken, and you want to trade your setup. Trade the high probability setup versus trying to trade everything, because what happens is you end up taking really bad positions because you want to be active versus letting your trade come to you. We're looking at LinkedIn right now, and from this gap up, it went up a little bit and it's just been churning sideways. Once it broke this level, it kind of was like a more cautionary tale, if anything. And once they fill this gap, now we see that where we're going to go and where we're going to look at if they give us a better retracement up to potentially this 214 level. Let's look at Tesla. Tesla is continuing down, so we see we have this pattern right here, which I would say is again the grind that we talk about and a break below. So any pops, I would look at to short below this level of 220. And that's pretty much it for now. Again, we'll look at Facebook. I know that there's some earnings that are going to be coming out. I think there's still Facebook or Amazon. I'm not sure, but make sure you're checking your earnings every day. And let's just give a final look at ES again, and maybe go on a smaller time frame to really break things down. And you can see from here. Where we need to hold this 1850 level, like I told you before. So looking at the smaller time frame, you could see that again you have this trend line. Come on, trend line. You have this trend line that is, they did a little false breakout, and I think this was basically at this 1903, I had a 1903 level. So again, I will be posting the levels out. You can follow me on Twitter. I'll be posting the levels out in the morning to kind of watch, and they usually respond to them pretty well. But again, this 1850 level is what we're going to want to see held going into Thursday and Friday. Take care.